Nigerian economy has been classified as one of the most volatile economies in the world due to its high dependence on oil revenue. Economic instability is being witnessed yearly through rising inflation, massive unemployment, low output and dwindling foreign reserves that results to unstable exchange rates. Amid the second wave of COVID-19 pandemic, the country's economy appears to be on a sustained recovery from recession as the gross domestic product (GDP) grew by 0.51%, well, that's year-on-year in real terms, in the first quarter of 2021, as this marks two consecutive quarters of growth following the negative growth rates recorded in the second and third quarters of 2020. Well, although the nation's economy potential is constrained by many structural issues, including inadequate infrastructure, tariff and non-tariff barriers to trade, obstacles to investments, lack of confidence in the currency valuation, limited foreign exchange capacity, and worsening insecurity, which is posing a threat to the growth of foreign direct investment into the country. As the Monetary Policy Committee meets today and tomorrow for the third time this year to deliberate on the policy direction amidst economic controversies that have shaped the growth of the country. However, there are divergent projections by analysts on the outcome of the MPC meeting, going at the latest inflation and GDP figures, as some project that MPC will leave all key parameters unchanged. Others are of the view that the outcome of the MPC meeting could go either ways. Well, to discuss this more and give an in-depth analysis to current burning economic issues and, of course, projections for the outcome of the MPC meeting, I have joining me via Skype the West African tax leader at Deloitte, Mr. Yomi Olugbenro. Good afternoon, Mr. Olugbenro. Thank you for your time.
Good afternoon, Tolu. Always good to be with you on your show.
Thank you very much for that. Let's start with the big one, 0.51% first quarter of 2021. Does it look like we are moving to that positive territory? We saw that shift in inflation, 18.12. There was also a drop in that. Mr. Olugbenro, what do you think about these figures?
Well, Tolu, I think it's positive development for starters that we've continued on that path of recovery. But I must say that it's quite expected. Virtually every organizations from the NBS to IMF to World Bank, everyone had projected positive GDP growth for Nigeria in 2021. So that we remain on the path of that positive growth is cheering, but it's expected. But it's very crystal clear to everyone looking at the numbers that the growth remained very fragile at 0.51%, even though it's much better than 0.11% we did in the last quarter of 2020. We know we're not anywhere near where we were this time in 2020. We were at about 1.87, or thereabout GDP growth. So growth remained fragile, but it's cheering enough for us to note that we're on that positive path. So what we need to do is to keep, looking at the numbers and looking at what we can do to strengthen areas where, the growths are coming from and what we can do to block the leakage. The oil sector is still in the red. It's a negative growth in Q1 of about minus 2.21%, even though it's much better than where we were in terms of oil GDP growth. By the end of Q4, we were close to 20% contraction. So that has reduced to about 2.2%, but it's still negative. Non-oil also remains as fragile as any other sector. We have less than 1% growth from the non-oil. So if you take away ICT and perhaps agriculture and maybe some aspect of manufacturing, particularly food and beverages, the rest are still struggling. So it's good news. That's the way I will look at it. It's good news. It's cheering news. It's positive development that we have remained on the path of recovery, but it's still so very fragile and delicate.
Very good breakdown there. Very fragile and indeed delicate. Now, the non-oil sector, it's worrisome to also see these figures for 90.75%, higher than 90.50% in quarter one of 2021. And manufacturing, too, will gradually out of the negative territory. What has been done right in that sector? We see manufacturers still complaining, even in the face of the AFCFTA.
Yeah, so I mean, if you look very much into details, you will know that it's not all aspect of the manufacturing. So I think the shining star around that area where we can actually share it's food, beverages, and tobacco. So some of the areas where we managed to secure positive growth, tend to then help to stabilize the entirety of that sector. But it's not the entire sector. I think outside of real estate, manufacturing, and telecommunication, the rest of the areas are still quite struggling. So what we need to do is to maybe pump a lot more energy into making sure that the productive sector, of the economy remain afloat and it's supported. I hear you mention, MPC meeting, that's going to be happening a lot later, looking at rates, and all of that. Whatever we can do in terms of access to finance, access to funding, making that, making cost of loan and borrowing a lot more healthy, for business and for the manufacturing sector would be a lot of, moves, that we need to applaud and that we need to concentrate on. So it's still too fragile for us to think that we need a lot of applause and claps in that area. There's a long journey to decency, to desired state, even in that sector.
Some analysts have also come out to say there's a little bit of exchange rate convergence. Some are saying that interest rates are beginning to climb up. And inflation also came down, like I also pointed out to earlier. So some are saying that these are some factors that could also shape that MPC meeting. I don't know if you're also thinking along that line, or what do you think they will really have to grapple with? A lot, I can imagine. But what do you think will be maybe the focus at that meeting?
Well, I think the usual suspects. So we must acknowledge that managing an economy of whatever size isn't such an easy thing. And if you look at Nigerian complexity, you will know that a lot is usually at stake when they meet. So you're trying to cut down inflation, but at the same time you want to make sure that you put your eyes on liquidity, and all of that. So you are balancing, interest rate, you're balancing it with inflation, and all of that. If I judge by the typical posture of MPC, they tend to be very cautious in their move and very reserved and very conservative. They're not known to take very aggressive position when it comes to shifting rates and moving in either direction. So those who say it can go in either way will be quite right, despite I think the generality of corporate Nigeria is expecting NPC to move to lower rates. But my gut feeling is that they will remain very cautious, and it's very likely that they will leave the rate unchanged.
Now, to be on this growth or economic growth trajectory, which is what we actually need as a nation, we grapple with something very, 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 very serious, which is revenue at this time. Governments cannot generate enough revenue, even to meet budgetary allocations and all of that. So many now say government need to develop policies that will sustain foreign investments into the country and sustain targeted interventions that would actually help to sustain this economic growth trajectory that we have started with. Mr. Yomi, what do you think? What are these targeted interventions? What should be the focus? Now, if you're to, I think there should be more of the fiscal side now, not the monetary side.
Well, that's correct, but you know that even to the fiscal authorities, there's always need for the handshake and for the balance between what the monetary policy authorities are doing and what the fiscal authorities are doing on the other hand. So at the end of the day, there's supposed to be an handshake and some bit of overlap and synergy in both efforts. But before I even talk about the interventions, because you said something quite critical, which is the fact that the country isn't generating the kind of revenue that it needs, to be able to keep, government afloat and keep running. It was on the news over the past couple of weeks when NNPC had to sensitize the government and the finance ministry of its inability to probably remit FAC allocation for the month of April and for the month of May. And why is that so? Because in spite of the fact that we've experienced increase in fuel price over and above what the benchmark budgeted price was, increase in oil prices is always a double-edged sword. It's meant to increase the amount of revenue the country is making, but it also automatically raises the landing cost of PMS. And when the landing cost rises, and NNPC needs to make sure that it continues to remain afloat to guarantee supply, there's more pressure on the cost and on the cost side. And so for me, every time that we talk about the revenue side, I always, raise the critical point that there's always two sides to this. So there's the demand side of revenue, and just like there's a supply side of revenue. So what are we doing to make sure that when the supply side isn't flowing in as much as we need to, what are we doing to curtail spending, and where can we make some significant change? And before we talk FDI, I think, domestically, the country actually have some fundamental issue to resolve. The issue of deregulation and subsidy that you just mentioned in passing is a huge drain on the revenue of the country. And so we need to sit at the table to be able to articulate the voices and opposition saying we can't have deregulation at this time. We need to be able to listen to them and understand what exactly are they asking to be on the table before that will be allowed to happen. Because unless we deal with that, there will be a significant amount of pressure on the revenue side. Every move and every action that government needs to make to be able to raise revenue are not often short-term measures. And so when we're waiting for the medium to long-term sources of raising our revenue to mature, what do we do to make sure that on the supply side, on the demand side rather, the amount that is available, we are able to utilize judiciously in a manner that deals with our most critical need? I dare say that financing subsidy, as critical as it is to those on the lower end or the middle class, I don't think from a pure economic analysis, it's one of our critical needs. We're channeling huge amount of funds to areas where it's not, the most critical. So we need to be able to deal with that. And so when we deal with what we can handle on the local side, we can then look at, what can bring in FDIs and what will make foreign investors to be a lot more confident about our domestic economy. And most of the issues are usually, sometimes outside of, they are both fiscal, sometimes they are non-fiscal. Insecurity is a critical issue. No foreign investor is going to come into your country to put in a lot of money if they are not sure about safety of life and their property. So it's a major issue. What are we doing to that? The petroleum industry bill has always been spoken about as one catalyst to getting in foreign direct investment in that sector. I'm happy a lot of efforts are going on in that direction, but we need to move a lot more with some sense of urgency, knowing that these are areas where we can unlock, some critical and very fundamental amount of revenue into the country. And when direct inflows that way isn't possible, what are we doing on the PPP side? So what are we doing on partnership with private sector to be able to do what government may not have the resources to immediately tackle, whether it's on the infrastructure or any of these areas that we're talking about, so that government can channel the limited amount of revenue that is available to area that is critical, deal with security, provide the enabling environment, support and let what the initiative that the Presidential Enabling Business Environment Council is doing to make business environment more friendly, support with policy measures and regulations that will make this, to be attractive to foreign investors, and leave the business space for the private sector to be able to do what they know how best to do. Government anywhere in the world has never been known to be the best, when it comes to business. Leave business to business people.
Now, when issues like this, so when critical issues happen, people take critical positions. Government of Nigeria has opted to borrow. Most times we always opt to borrow, and our debt burden now is becoming alarming. Though the argument is that we haven't gotten to that threshold that should get us worried. But what we have still worrisome as a country. What do you make of the debt burden? What is expected? How do you see us sustaining this, even with this revenue challenge?
Tolu, I disagree totally with anyone that says the level of our debt hasn't gotten to a level where we should be worried. I know there are a number of statistics, particularly when you relate our debts to the size of the GDP.
Yeah.
You would say the threshold appeared to be manageable. But you don't just look at your debt in terms of the relativity to the size of your GDP. You look at it from the capacity to finance the debt obligation. And if you look at our ability to finance our debt, we are in the red zone. We cannot, continue at this rate unless something critically happens. And what is that critical thing? We're able to raise our revenue significantly above what we're currently doing, so that debt service obligation as a percentage of our revenue can be acceptable. It is not at this particular time. And to the extent that our capacity to service our debts, we struggle with it, then we can say we're not in the red zone. And I don't even think that is the current narrative. It's not from the Ministry of Finance, and it's not from any of the debt management authorities. They had only continue to mention that we're borrowing for the good reason. We're borrowing to finance capital development. We're borrowing to finance infrastructure. If you put the question direct to the Ministry of Finance or the Minister of Finance, Budget and National Planning, or you put the question directly to the DG of Budget, and you ask if any of them is comfortable with the debt service obligation and capacity of the country, none of them is going to nod in agreement. They are going to express the same concern. So we are actually at that level. And it's critical that, we focus on this. Debt is good when you apply it to income generating asset, you apply it to critical infrastructure, but you must have the capacity to be able to service those debts. So at the level that we are, our capacity to service those debts, is waning. And so we need to do something which talks to the point I made earlier. When you have limited headroom in terms of how quickly you could grow your revenue, then we need to be a lot more surgical in terms of what we would do to our spending side. We haven't done enough. Hear me well. I'm not saying we are not trying. We haven't done enough to show that we recognize that the cost of governance, the subsidy, and a number of areas where we are channeling too much fund needs to be brought down. And these are big constitutional issues sometimes, so the size of public service, the size of, the legislature, the size of, the executive. These are areas where we need to trim down to the level of our revenue, because we don't have the amount of money that we can use to finance and to keep that bloated service running.
Let's wrap up on this note. We have inflation at 18.12%. That's no more news. And unemployment rate at 33.3%. We have underemployment. We have the GDP figures and all of that. Let's project. What do you see? Slightly, I think, for Nigeria, we are doing quite well with regards to COVID-19, but we must not drop guards. We must continue to wash our hands, social distance, and at least maintain all of the others by the Presidential Steering Committee. But what do you project for us as we move on as a country, with all sectors picking up to this fullest as we move on?
Well, I remain very optimistic that the trajectory we are on, even though it will remain,
Slow.
on the cautious note, I remain optimistic that things will continue to pick up positively. By the time the Q3 GDP growth rates are out, and when we are ending the year, my expectation is that we will grow close to well above 1%, still in the positive trajectory. But what we need to know is that beyond positive GDP growth rate, we must focus on how this trickle down to the ordinary man on the street, to the small players running their businesses. So it's great to continue to have positive, GDP growth rate. The inflation rates are high, but it's dropping. It is good to have those numbers, but it's a lot more, critical to recognize that before those positive, statistics trickle down to the life of ordinary citizen, it takes a little longer than that. So, and that should, show in a kind of direction, both in terms of policy, the consistent of it, the predictability of it, that government needs to continue to focus on, so that the life of an average Nigerian continues to be as positive as the growth rate we're saying continue to show.
It's really good to have you join us this Monday afternoon. I appreciate this. Thank you very much, Mr. Lugbenro, West Africa tax leader at Deloitte. We appreciate this.